welcome back to my channel. Before I start, don't forget to like, comment, share, and subscribe. I will read an article by Yasin Ibrahim. Investing.com. Federal Reserve members were unfilled in their view that pushing interest rates to restrictive level was needed to bring down inflation toward the central bank's target. The minutes of Fed 29 until 27 July meeting showed Wednesday. At the conclusion of its previous meeting on July 27, the Federal Open Market Committee raised its benchmark rate. Participants note that moving to an appropriately restrictive stance of policy was essential for avoiding an unanchoring of inflation expectation, the minutes show. In the process conference that followed the monetary policy statement, Fed Chairman Powell signaled that the central bank may consider a pause on rate hikes after the September meeting to assess the impact of tightening on the economy and inflation. At the July meeting, the approach to be support among members to resist the pace of tightening at some point. The minutes showed how some were in favor of maintaining the Fed's benchmark rate sufficiently restrictive level for some time to ensure that inflation was firmly on path back to 2%. Since the July Fed meeting, economic data including signs of easing inflation and a surge in monthly jobs have lost trade based on less hawkish rate hikes. Fed members, however, were quick to push back against the prospect of easing the pace of monetary policy tightening and reiterate that the fight against inflation is far from over. Earlier this month, San Francisco Federal Reserve Bank President Mary Daly said that inflation remains far too high and not near our price stability goal. The slower pace of inflation seen last month was mainly driven by falling energy prices, but core inflation, which excludes food and energy, will prove key to determining whether inflation will remain higher for longer. All eyes will be focused on how sticky is core inflation. That's going to start driving the next leg of this inflation discussion. Robert Conzo, CEO of the World Alliance, told Investing.com in an interview on Tuesday. The Fed has hiked rates by 225 basis points or 2.25% in just 5 months, prompting worries that the central bank could overdo it on the monetary policy tightening, pushing the economy into a recession. While the Fed has repeatedly pointed to a strong jobs market as indicator of economic strength, the central bank is starting to get concerned about recessionary fears, adding that the prospect of a 50 basis point rate hike for September is present in. Future closer monetary policies are just a week away as investors await commentary from Powell at the Jackson Hole Economic Symposium on August 25 until 27 July. Participants note that moving to an appropriately restrictive stance of policy was essential for avoiding an unscoring of inflation expectation. The minutes show in the press conference that followed the monetary policy statement. Fed Chairman Powell signaled that the central bank may consider a pause on rate hike after the September meeting to assess the impact of tightening of the economy and inflation. At the July meeting, there appeared to be support among members to resist the pace of tightening at some point. The minutes thought some were in favor of maintaining Fed's benchmark at a sufficiently restrictive level for some time to ensure that inflation was firmly on a path back to 2%. Okay guys, that's all from me. Don't forget to like, comment, share and subscribe.